Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, August 25th, 2020. I am Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. You'll notice that we've gotten a very significant breakout from the narrow 10-day range that we discussed from before. We actually had it as much as a narrow 13-day range, as you can see here. And we got the breakout in the previous session. Of course, that breakout mostly occurred in overnight and pre-market trading, and then once price came online through RTH, it mostly trades sideways throughout the day. A final late bounce off the 3410, 3412 zone led to a nice finish on the day, but for the most part what we talked about was, can price hold above the 3400 level by the end of the day? That's the most important level right now, and overall it's done a great job of doing that. And right here we've seen new highs even today here, coming into a high of 34.4875. You can see the PIMA trigger zone is still firmly intact. If we were to push down into 3400 now or drop below the 8-period average of 33.91s, that could provide another trap opportunity, even as deep as 33.80, for a shot at continuing this thing higher until proven otherwise. Again, this month has been very, very bullish. It has bucked the trend compared to other August seasonality, where we tend to see a pullback. In an election year, it tends to be up. We saw those stats at the beginning of the month with the monthly market outlook, and again we see that this thing has been able to hold the PIMA trigger zone and will likely finish on highs by the end of the month, which is Monday. Overall, again, until market structure fails here, this thing continues to push higher toward upper upside targets. We have the 33.85 that we've reached. Remember, the break here got us 33.85, and the next one up is going to be 35.38. So we could be looking at a nice continuation higher toward that 35.3875 100% target, which is measured from this impulse move down and this breakout. So 35.38 could still be ahead, especially if price continues to hold 33.85 to 3400. Boom, that could be the next move ahead. Okay, let's take a look now at the NQ. You'll see with the NQ here, we have an inside day right now. The previous session traded to new highs, and today here so far heading into RTH, we are trading right around the midpoint of the previous session, chopping back and forth here around that level at the moment after dropping away from the overnight highs. Right now, there is an impulse sell-off that occurred in the 60-minute time frame, 15-minute time frame of the previous session. That gave us a nice little key range here. That key range is going to give us intraday and intra-week key levels to work with. If price can continue to hold, again, this upside or uptrending PIMA trigger zone continues to be bullish. So if we drop into that zone, there could be a trap that allows for a bounce and continuation higher. The next level up will be the 11.9 to 12K level, and if price pulls back, say into 11.4, maybe even as deep as 11.3, that could provide a nice buying opportunity for a move higher. The 1,000 point move that we talked about before has now come to an end. We talked about this being a bullish outside bar, and if we test the midpoint the next day at 10,700, we could rally from 10,700 to 11,700. That could be a plus 1,000, and it got there flawlessly with only a 9-point adverse excursion here and a continuation. Just a tremendous move here. Now, from a longer term perspective, if price continues to hold 11,058, we likely see a move to the outer 100% target, which is 12,388. So we could drop as deep as 11,058 and still see a great continuation toward 12,388. So right now, very, very bullish. Again, I don't think we get as deep as this right now. The pattern has tended to be about, in the 11.3 to 11.4 zone, followed by a continuation higher. Overall, this market remains very, very bullish until proven otherwise. All right, let's take a look now at crude oil. With crude oil here, this one has continued to trade around that 43 level. It's trading right at it right now, 42.95s. You can see this range has continued to develop. It's now past the 13 period range of narrowness here that has been compressed for several days. You can put it up to a 15-day range, right? So this thing has been compressed for 3 weeks now, and with that compression, again, it's building energy for a move. The small move right here tells us about $5.31.5 of range could be ahead if we break out of this range. So this is the range we're talking about right here. It has happened at the top of the key range. So we have this impulse rally that occurred here back to the midpoint here. This could be a reaccumulation phase ahead of a breakout that takes this thing much, much higher here. The thing is, we have not been able to see an acceptance above 43 just yet. That's a level we've been talking about. Even 42.50 has had a tough time finding acceptance above that zone. Although it has traded in that area, it still hasn't been able to really close beyond 43 just yet. So if we start to get a breakout, it could be tremendous. We could see about 5.3 points of range, and that's on the shallow end. Because when you see a 15-day move, it tends to be much, much bigger than that. You know, when you're talking 2 to 3 weeks of range movement, it's not hard to see at least 10 points of range that could be seen. So this could be much more significant. Again, on a longer term perspective, 41 or perhaps 40 is important. As long as it stays above that zone, it may be headed to $50 here, especially with the amount of range we have. Now keep in mind, the key range that we have drawn out here, if it breaks to the upside, we have two upside targets here. One at 45.92 and one at 48.32. So those are the two upside major targets that could be reached based off the energy we've built and based off the back end of this key range. So again, lots of energy and watching and being patient for a potential breakout ahead. All right, let's take a look now at gold futures. Now here's a look at gold. Gold got an impulse sell-off here recently that gave us a key range. That sell-off right here that dropped us into those lows here and bounced back to the mid was very important. From there, we've had a failure to kind of really reestablish off the 1928 back up here. We had a failed high in the previous session and a close below the midpoint of that day. That's important. Here we're still testing the 28 level, which is the lower 25% key level. And the way it appears here, you know, we had a failure here where it dropped. We had a failed high here and it dropped and closed below here. It appears like we're about to see another move down. It wasn't able to really get going to the upside. And so if it gives out 1925, 1920 here, it opens up a retest of this low of 1874.20. A push through that low could give us a trap opportunity. So anything between 1830 and 1870 could provide a trap that could be an easy return back to the midpoint of 1981.70, right? So that could be a huge 100-point move followed by a potential continuation across the range to 2089. So that could be the development of this wider range. We've already made a few passes like this. If we fail here, look for a drop down. So that's going to be the blueprint that I'm watching right here if there is a failure through 1920. Holding 1928, 1925 here could keep things in the range for a little while between 75 and 25, but outside of that range here is going to lead to the next key move. We'll see what happens here moving into the rest of the day. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.